Good morning, I'm Aidan, and let us get you up to...
US President Trump. If Powell doesn't leave, I have to fire him. Gold price forecast. Gold used US dollar drifts below $4,800 as the US dollar picks up.
US dollar. Vulnerable slide as peace hopes build. MUFG.
Support line has been breached by NAS 100. This price level has been tested at least twice before.
US dollar yen appears to be approaching resistance, a potential opportunity. FTSE 100. Up marginally at noon. Rank Group, Antofagasta post strong gains. Brent. Consolidation near recent lows. BBH. UTI price forecast. Returns above 90 just as Trump warns new military deployment in Iran. US President Trump. I think Iran war can be over very soon. Fox Business. Australian dollar, US dollar. Limited near-term upside. Within 0.7100, 0.7155 UOB.
Don't forget to refill the coffee or tea. Did you guys get the email reminder? Good. All right, good morning. All right, let's go. right. Hey, good morning. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky. Not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So welcome to today's live stream, a collaboration between TRADARS and Traders Way. TRADARS for analytics, Traders Way for execution. Lufflet to le mum. Yes. Oh yeah, baby. Oh yeah. And if you trade through Traders Way as our execution partner through TRADARS, you get a little bit of your spread given back to you every day as cash. Not equity, cash. So you automatically get a spread rebate. Isn't that nice? But you have to connect through us. Cool, man. Hey, that adds up over a course of a year. That adds up, man. That adds up a lot. So anywho, let us start with the SITREP report. Good morning, I'm Aidan, and let us get you up to speed on the current market dynamics. The global market is currently operating in a robust risk-on environment, primarily driven by a significant decline in the U.S. 10-year yield, which has dropped to 4.256%. This easing of rates, coupled with reports of mediators nearing a U.S.-Iran ceasefire extension, is fueling a broad rally across equity indices and growth-sensitive assets. Biggest movers right now, high-yield bonds, NASDAQ 100, S&P 500, Brent crude oil and U.S. oil are up. Yes. Yeah, so notice that Aidan not only is watching all the economic data and all the technical data, he's now actually all day, 24 hours a day, reading the headline news that comes up on our headline radar. And understands and remembers. So in this case, in today's SITREP report, he's talking about reports of mediators, right? Nearing an extension in the ceasefire. Dude, it's cool, right? Yeah. And from that, he now creates scenario analysis, bullish case, base case, and bearish case, and what would lead to these situations. So he's talking about the IRGC. I mean, it's cool. Yeah. Yeah, it's pretty cool. It's a good use of our technology. Anyways, S&P up, VIX flat, but at 18. That's much better. It should be 12 or let's say below 15. But hey, it was 33. What, 10, 12 days ago? Bitcoin back, still hanging out at 74. It's been going up and down and up and down, but in the sort of 72, 75 range, not the 62, 68 range that it was in. So now it's in a higher range, and if we continue with risk on, maybe we can go from 75 to 80. Wouldn't that be nice? Okay, gold hanging in there. Okay, yeah, it's down a little bit, but above 4,800. And that's been our high zone, and now we're hanging out there. So maybe this is all right when we, is it now 4,800 to 5,000? We'd need sustained risk on, but we've had sustained risk on for about, 10 days now? Okay. Oil got way down there, 90. Did it actually hit 90? I think it was closer to 91. So here we are at
92 and a quarter, so it's up. But hey, once again, what was it? 4 days ago, we were at 110 or 105, 106, 107. So 92 ain't too bad. Dollar flat right now, 12 basis points. And yields are down a full percent. That's good. Now, remember, before the war, when everything was fabulous and right as rain, that yield was as low as 3.9 something. Then it went to 4.5, and we talked about that being a psychological level plus seasonality. And yeah, so we went from 4.5 to 4.25. That's a big deal. That's a big deal. And all that leads towards risk on, huh? Oh, show. Let's get an update on the news.
Bitcoin price forecast. BTC retests breakout zone as risk on sentiment supports upside potential.
Australian dollar, US dollar. Limited near-term upside. Within 0.7100 0.7 cents and 155 UOB. US President Trump. I think Iran war can be over very soon. Fox Business.
US President Trump. If Powell doesn't leave, I have to fire him. Gold price forecast. Gold use US dollar drifts below 4,800 as the US dollar picks up.
US dollar. Vulnerable slide as peace hopes build. MUFG.
Support line has been breached by NAS 100. This price level has been tested at least twice before.
US dollar yen appears to be approaching resistance, a potential opportunity. DXY. War gains unwind as allies resist blockade. DBS.
All right, so right now some of the charts, you'll see they're kind of glitchy. It's because we're rebuilding the chart engine right now, and should be done in the next couple hours to make it super real time. Super real time. So it's in the process of building. In fact, let me get these messages. Dare I go to publish? So we'll see if we can get that. Risk radar. So we're okay right now for the day, and overall things are good. We're just hanging on there. We're just hanging on, so we're not aggressive for today. Okay, we're mixed to neutral to bullish kind of thing. We're neutrally bullish. Things have improved a lot since the end of March, which again is completely seasonal. That's exactly what you would think. And it happened, which is really cool. So what are we, about an hour away from that? 49 minutes away from manufacturing data. That's cool. It's Wednesday, so we have the EIA stock, right? Inventory data. Beige book later today. Had speeches out of the Bank of England and ECB. And then later tonight, we're running into Aussie inflation and Aussie jobs. Cool. So what we track is the unemployment rate. We don't actually track the employment change, but you should know, bada bing, bada boom, it's Aussie jobs tonight, which to me has always been a great scalp. What? Hang on. Hang on. Hang on. I think I have to do this is cached. There we go. That worked. All right. Scatter plot fixed. It's one of our favorite tools. So everything to the top right is bullish as expected. Everything to the bottom left is bearish and expected. Everything else is kind of mixed. Well, you can see right now a lot of things are not moving. Some things are moving, but not a lot of things. We can break it down. Well, let me ask him. Hang on. Yeah, I'm just having them look into these if he's pulled this properly. The scores are there, but not necessarily the overnight price action. Nikkei up a little bit, DAX up a little bit, Dow up a little bit, NASDAQ up a lot. Yeah, NASDAQ up a lot. Cool. Currencies. Aussie dollar up, Aussie yen up. And how did our Kiwi do? Because remember, Aussie dollar up, Aussie yen up. I think we're from our day trading meeting last night or market close meeting. I believe, yeah, and Kiwi dollar up and Kiwi yen, right? Those were the 4 best trades that we looked at quantitatively. So, yeah, and yeah. Where's the Kiwi yen, though? We don't have a Kiwi yen on here? Okay, let me ask him about that. Cool. So that worked out really good. If those are two, 1, 2, 3 of and I Kiwi yen I think is just not here. So I asked him. I'm like, hey, I just asked Aiden. I'm like, hey, is Kiwi yen on here or not? I suspect he's not drawing it, but it's in the database, obviously, so he'll draw it. So at least out of the 3 that he's measuring, the 3 best trades that we picked out last night, over 12 hours ago, are now the best performers. Three of the 4 best performers are the ones we picked to be the best performers. That's cool. And we get that from this index radar, just so you know. Taking a look at commodities, oil up. Okay, up 1.6%. We want oil down. Now notice this is obviously overnight, so oil's down from 105 to 90, but it's up from 90 to 92. Basically, right? Yeah. Okay, we got some of these scores at 0. I'll take a look and see why. And I have to keep telling them we don't want symbols, we want words. Give me the words. But silver down, gold flat. Yeah, platinum up. Interesting. Ethereum and Bitcoin both down, but remember the lowest low, so it's down. Bitcoin is down 0.5%. That's a burp. It's not even a sneeze or a belch. It's just like a little a little pop. No big deal. That's nothing. And so now the bottom of our current range is what, 73.5, and we're trying to get above 75. So we'll see how today goes. And yields are down a lot as expected. Okay. Winner, winner, chicken dinner. Yeah. Cool. So that's working really nice. Yeah, of course, David. Yeah. Another way of thinking of it, David, this buy and sell zones, it's actually fundamental. So, for example, where's my drawing tools? Let me get my drawing tool. So I could say, yes, they come from higher time frames. Let me give you another way, and a better way, actually. Okay? Conviction scores. So everything here and everything here is what's expected, aka bias. I didn't get that right, did I? Okay. So this is why it's a contrarian, David, because you could look for opportunities to sell high here. You could look for opportunities to buy low here. We already know what the trends are, fundamentally and all that kind of stuff. We know what the trends are. And it's all, and technically and fundamentally, and that's how it goes into the score. Now, these scores come from the fundamentals, come from here. And so why are we bullish Aussie yen? Okay. Well, we've looked at all the fundamentals comparing Australia versus Japan for GDP, inflation, unemployment, and interest rates. Okay. We're also looking at things like seasonality, the commitment of traders report. We're looking at the charts. We're looking at the value of the Aussie and the value of the yen, independent of Aussie yen. And then we're also looking at their general economic outcome. So we're comparing these. We're looking at seasonality. So Aussie yen is bullish in April, but not May. Okay, and here's the institutional positioning and retail positioning. So we look at all of that. Okay, Aiden analyzes everything, and we give it a score. So we look at a lot of things, from the general economy to interest rates to inflation and GDP to the value of the currency that we create our own indices, right? We synthetically create indices for every G10 currency. So you know the value of the pound versus everything, not just pound dollar, right? We look at charts, long-term and short-term. We look at seasonality, which is 20-year averages of up, down, or sideways. And we're looking at institutional positioning, and then weight them all and give them scores, and then so we can do comparative analysis. All of that score goes here. And so there's sort of the longer-term scores, looking at everything fundamental and technical and market positioning, because really, if you think about it, COT, the Commitment of Traders report, is really a sentiment gauge, right? Where is all the money? What are they buying? What are they selling? Okay, well, it's sort of a sentiment, right? Versus what's happening like right now. Okay. So that's what you could do. You could sell these rallies, or you can buy these dips. I'm more of a buy a dip thing because I'd rather get into a long-term position. I don't want to be in a contrarian radar, in contrarian trade. I want to know what the contrarian moves. So high time frames, yeah, at the very least, you would start on a daily, right? But David, my book, Strategic and Tactical Forex Trading, well, the strategy part is longer term charts, like let's say daily charts, and fundamentals to give you a bias. Then once you have a bias, now you drop into a smaller time frame and say, well, I can only buy silver, or I can only buy Bitcoin. So look, I've already analyzed my chart for Bitcoin. This is Bitcoin. Why am I watching Bitcoin? Well, I'm a bull. You're like, well, it hasn't been bullish for 12 hours. I know, I can see that right here, but I have a positive score. My conviction is 4.17. I'm fairly bullish on Bitcoin right now, and it's down 0.5%. Well, that's what I'm looking for, David. That's why it's contrarian, because I want to buy the dip. I want to know it's out of position, not that I want to trade against a trend, but that the asset I want to buy has been falling. So this is my plan for the day on Bitcoin. I've already identified support. I've already identified trend. I've already, and it's already in play. Do I own Bitcoin? I do own Bitcoin. Not here, but in other places. So this matters. Every tick right now matters. Yeah. Okay. It's not a tremendous position, but as far as actual cash value, it's 5 figures. Wait, 5 figures. Yeah, 5 figures. So you're like, well, it ain't chump change either. So I'm watching every candle. And if I were a buyer, I want to see that dip. And then I already now have targets. And by measuring the standard deviation and the slope of the mean, I can also get sort of a projected rate of change. Okay. Does that answer your question, David? So at the very least, technical, but you should have a lot more than that. Here's the next sell zone, and that's at 85. So I'd like to get from 75 to 85. You guys want to see something new? Does anybody want a treat? Who wants a special present? Yeah. You notice anything different? What is this? Prediction radar. What is that? No! You're kidding me. Oh my god, it's so funny. Too bad, so sad. No, hang on. Where's Aiden? Aiden! Where is he? Aiden, get your artificial ass in my office right now. Where is he? Not there. Where did he go? Not there. Oh my god. Did he go over here? There he is. Hang on. All right, let's see if we can get him fixed. He messed something up because, like I said, we're updating our chart engines to be even faster. The goal is to get our charts near zero latency as possible, or not latency, but let's say as close to real time. Like, wouldn't it be cool if you could just trade off of TRADARS and you don't even need charts? What if TRADARS was your trading platform where you're like, yeah, that makes a lot of sense. Buy, done, executed. Wouldn't that be cool? So anyways, for that, our technicals will have to be as close to real time as possible. Now, if you're skippity scalpy and you're like, well, if it's a 5-second delay, Wayne, oh my God, that won't work. Yeah, well, it wouldn't matter if you're making trades that are worth 300 pips each. But if you're making trades worth 8 pips each, yeah, that could be the difference of success or mediocrity, right? So hang on, he's working on this because it was live. It was live. So we'll come back to it. All right, so the vote is that when we log into this page, again, a new treat. This was launched, less than a week ago. You log in, you go to the index radar, and it shows you Aussie is the best thing. Kiwi is the second best thing to be owning today. Well, we predicted that last night, and we created trade plans for that. Also, selling US dollar is the best thing right now, followed by Swissy, then yen. Okay, all of that is risk on, but we're not using this for risk on or risk off. We've already done that analysis on the risk radar. It's assumed, well, not assumed, but when you go to the correlation radar, risk on means sell yen, sell Swissy, sell dollar. That's what has been happening. But this is happening right now. So we have the quantitative data to say this should happen based on every 5 minutes we look at every currency on its own. So we have to separate all the currency pairs every 5 minutes and then track the relationship with each other, but also relative to things like VIX, right? So anyways, and high yield bonds and all this kind of stuff, right? Junk bonds. So we look at all this and we would assume that these are weak. Well, they are weak, which is a great assumption. Now, our assumptions are not assumptions. It's quantitative. It just has been. Doesn't mean it will be, but over 90 days, that's what usually happens, and it is happening. Cool. So yesterday we were like Aussie dollar long, Kiwi dollar long, Aussie yen long, Kiwi yen long, but Swissy was higher up, closer to like CAD. So things have changed in the last 12 hours. Good to know. So now you can start building positions in Swissy with these two. Now you're like, Wayne, I kind of like this. Aussie versus everything is strong. Dollar versus everything is weak. But you're like, but I'm a little slow on putting pairs together. Oh, how about this? Bullish. Okay, bullish. See, what I'm highlighting is our conviction scores now comparing New Zealand to the United States. So in now seconds, 1, 2, 3, 4, 5, 6 things you should be doing right now. And the other things are less good or not good at all. For example, both Swissy and yen are weak. Both dollar and Swissy are weak. You shouldn't be trading them because there's no clear edge. Isn't that nice? Or you're like, help me get my thoughts. Okay, 1, 2, 3, 4, 5, 6. Okay, or let's say here's the top 5 or 6 things you should be buying today. And if you look at the scores, not just the bearishness, but like 0.59, 0.62, 5.1, 4.8. So these are all, a 0.5%. And these are barely break even. So these are 5 times better opportunities than these opportunities. So forget it. Forget it. Don't even worry about it. Focus on these. That's what we did yesterday. And right now, they're the best performers. So you should already be in those trades is another way of looking at it. And what you should be doing today is probably looking at adding some Swissy. It looks like Aussie Swissy and Kiwi Swissy. Isn't that nice? So, right? And then we have this view, if you prefer. And once again, we're looking at what they're doing. Base versus quote. Okay? Now remember, to get this calculation, I didn't think that would load. To get this calculation, you have to look at Aussie versus, let's say, up to 9 currencies, and dollar up to 9 currencies. And you have to measure the relative change every 5 minutes. Okay? So what is that, 81 calculations every 5 minutes? Are you doing that yourself, or would you like TRADARS to automate that for you? Yeah, I'd like it automated too. Dude, but you see how crazy this is? And then you can look at it over the week and over the month if you're looking at swing trading and position trading or trying to line up seasonality. Like, for example, with seasonality, let's say, so let's say the S&P 500 typically tops out in April and declines in May. So we know there's a top coming in April and a trough coming in May, because then let's say we look at the seasonality and June is up, right? So that's how you'd read that. So there's a top coming, then there's a, right? Then it falls for weeks, and then there's a trough, and then there's a new rally. Well, how do you know when to get in and change positions or take profit? Well, maybe watching the change here on the 7-day. So let's say, for example, it's Kiwi dollar we're talking about. Let's say somewhere in April, Kiwi dollar tops out and goes from bullish to neutral to bearish and continues to be bearish for a few more weeks. And then that bearishness wanes. And so, moves sideways and then moves up for 8 or 9 weeks. Well, you would be able to see and isolate both the currencies and see the relative change. And then you can see, oh, here's the top forming. And that's when you'd go to your charts and you're like, oh, yeah, we're on the monthly pivot points, of course. Or you go there and, oh, my God, it's a double top. Or, oh, my God, it's a head and shoulders. And you start putting things together because, one of the things that I focused on, I think at FX Street recently, is this idea that you need to have everything drawn out and planned in advance. You can't just stare at the numbers and stare at your charts. The reason that doesn't work is that we have a lot of confirmation bias inside the human brain. You see what you want to see. But what if you don't know what you're looking at? What you see is indistinguishable. Everything is random. And what you need is confirmation bias. And the classic example and the story I gave is I used to play a game with my kids as we're driving, and they were in their car seats in the back seat. We'd be driving somewhere, and you got a point if you saw a red pickup truck before anybody else in the vehicle. You have to call it out, and then you get points. And we played this for years. And you know what? Yellow trucks are rare, right? Not unless you're looking for yellow trucks. Even subconsciously, you're not like actually driving and scanning for yellow trucks, but all of a sudden you decide to see. Your brain, the subconscious part of your brain says, aha, look, yellow truck. Even though you're not consciously looking for yellow trucks, you're subconsciously. And as soon as you see a yellow truck, then it pops into your consciousness and you're like, yellow truck. Yeah, daddy gets a point. Yeah. So you have to trade like this where you're like, I think a double top is going to form somewhere in April. So then you print out your charts. Well, what's the likely high for April? How about monthly M4 to monthly R2? Okay, great. So what if price goes up there? You're like, well, this month is bullish, but it's going to likely peak out. Well, how do you recognize it peaking out if you don't expect it to peak out? So if you think it's going to hit a top, suddenly you're going to heavily see those reversal pivot points. You're going to heavily see double tops or lower highs. You're going to see reversal patterns because you expect the reversal pattern, so you'll spot it because you're already confirming your bias. Not the fundamental bias, the seasonal technical bias. And all of a sudden you're like, oh, dude, look at that thing double topping at the R2. Take profit, man. Take profit. Maybe if I get a lower low, I'm going to take the next lower high because that's seasonal. I can now, even though I've been long for 5 weeks, I can be short for 3 weeks, and then I can be long for 9 weeks. Why? We have the data. Why do you have to be random? Do you like being random? Do you like this being random? It's not random. Okay? So you have to use your confirmation bias so that you recognize the situation and make the right trade instead of reacting to everything, right? Like everything has already happened that you're looking at. Someone else already did the analysis and made the trade to make these things go up or down. Yeah. Let's see if he's done this yet. Come on. Boom. Okay, check this out. We have 30 predictions. Dude, are you ready for this? We have 30 predictions. What is the Fed going to do at the April meeting in a couple of weeks? 99% chance, no change. What about this whole quarter, right? Pause, 99%. Will Powell say good afternoon at the beginning of his speech? 97% chance he will. What about the ECB interest rates in April? 95% chance of no change. Okay? And a slight chance that they raise. Yeah, not likely to happen. What about the June Fed meeting? 91% chance right now, no change. And there's a more likelihood of a cut than a raise, but that's not likely. So 91% chance of no change at the June meeting when Warsh takes over. How high will inflation get this year? Above 4%? 52% believe above 4. 90% above 3.5. Isn't it? Well, what do you guys think of this? Did I do something good? This is quantitative. This is not opinion, it's quantitative. Okay, you hear in the media all the time the Fed's going to raise interest rates because of high inflation. I keep saying, no, that doesn't make any sense. 86% of the market agrees with me. So the knuckleheads on TV don't even know that what they're talking about. What about the July Fed meeting? 83% chance, no change. We're calculating the odds of April inflation, which is reported in the middle of May. Okay, 3.6% say 78% of people say next month's inflation report will be 3.6%. And the percentage change of the 78 is up 0.5%. So it was 77.5 yesterday, now slight increase. South Africa inflation. Hey, that's for my South African brothers and sisters. There you go. You like it, the rand? Okay, inflation's going up, the market says, about, right, for South Africa. Inflation going up in Mexico, says the market. Argentina, inflation. What? 35%. Is that an error? No. In fact, you can take a look. Okay, it can go even higher than that, some people say. So when you balance it out, is what, that's what the market is saying. Canadian annual inflation. What will WTI crude hit in April? Kind of a mixed bag, huh? But 71% of the market, and that's a big jump just in the last 24 hours, believe it'll be below $85. In this month. 20% jump since yesterday. How about India? Yeah, there's your. So, and you're like, dude, there's just too much. You have to organize this. Well, you can organize it by interest rates, by inflation. We need some more oil. We need some gold in here, don't we? Chinese GDP. Okay. You can see 68%. So the majority is saying 4.5 to 5. And 28% say 5 to 5.5. Yeah. Which would be good for Australia, wouldn't it? So, to me, obviously, interest rates are the most important. What about Bank of Japan in April? No change. What about the Fed in June? No change. Is the Fed going to hike in 2026? No. What will the Fed rate hit before 2027? 66% believe by the time we get to 2027, we'll drop interest rates to 3.25. Yeah. Or even lower than 4.25, I guess is what it's saying. Or 3.25 or lower. Interesting. What about the June Bank of Japan meeting? What will the Fed rate be at the end of this year? 3.5. Very similar to this. Some people believe there's quite a bit of cuts coming, but it's a small percentage. But that's what they're that's how they're investing their money. Like, dude, what can I say? So they're actually those how do you say, outsiders, the ones that are sort of outside the standard deviation, they're pulling this down one rate cut or more, and then normality pulls it back up and says, well, 3.25. But really, if you narrow it, okay, narrow the questioning. See, look at that, 32%, 3.75, right? So anyways, when you look at everything and average it out, 3.5. If the Fed's going to cut this year, when? The December meeting. But there's only a 60% chance based on the analysis, based on the way people are positioning their money. If there's going to be a cut, end of the year. So now, remember, at the beginning of the year, we thought maybe 3 cuts. Now we're saying maybe 1 and nowhere soon. Okay. ECB interest rates, no change. 50-50 market, but notice a 21% increase. We can look at it and 50% say no change, 36% say a rate increase. This is physically on Earth, my basement. My terrace level. Yeah, this is my home office. And now I have an office. I'm an entrepreneur in residence at a local incubator. So during today, and in fact, I got to get over there pretty soon. I sit down and mentor local entrepreneurs and business owners. And it's through an incubator run by the state and by the county and through the Board of Education. So I'm training startup CEOs again, which I did 30 years ago. So that's kind of exciting. Cool. So what do you think, guys? Can I get a thumbs up? And I think I can make this more detailed. I can add some, but hey, we have 30 markets. Yeah. Should I make this free or should I make it paid? Hey, Dan, I'm glad we finally got it all fixed. It was a peculiar glitch in the matrix. Yeah. But ancient history now. Yeah, free. Prince wants it free. Do you guys know that the main subscription to TRADARS is free? Yeah. So anyways, right now it's free. Yeah, no, thank you for your patience. I know I think yeah, you were close to yeah, you're close to nasty grams, right? Yeah. So anyways, I'm glad we figured it out. So look at this. So I added this and I added this and they're both free. It's not a bad deal, right? You think this was free? You think building it was free? Yeah. So anywho. Cool. Let's see. So what should you be doing in April? VIX falls in April. Ripple, Solana fall in April. Aussie yen goes up in April. Did you know that? And right now, we're actually measuring this. I showed you in the index, right, in our synthetic indices, that Aussie yen is our best performer. It's not measuring what it's doing now. This is telling you what it's supposed to be doing now. It has no idea what's happening right now. This number is looking at April for the S&P 500 over 20 years of weekly data points. So you knew weeks ago, on April 1st, Aussie yen is probably going to go up. Okay? And guess what? We thought the 10-year price would go up, which means the yield would fall, because that's normal. Guess what? That is exactly what has happened so far. Remember, we were at 4.5 and now we're at 4.25, which means there was a rally in the 10-year. Well, look, there's supposed to be a rally. If you don't know that, you don't know the game. You're not being competitive. And once again, remember, it's confirmation bias. So if you thought, yeah, there's going to be a rally in 10-year treasuries, yeah, there's going to be a rally in Aussie yen, are you going to miss it technically when it goes from bearish to bullish? No, because you would recognize it because it confirms your bias. You're like, aha, I knew it, buy a dip. But if you have no idea it's coming, you're always going to be late. You don't know when to take profit. You don't know when to stop selling. You don't know when to start looking for dips. You know, and so you have a great month. You have a great couple of weeks where you get a bunch of trades together, and then you keep selling because that's what you did last month in March. Well, guess what? Aussie yen is a down month in March. So you would have been a bear. But then you would have expected Aussie yen to go up in April. Why? Because it usually does. So you would then, see, that's the importance of the confirmation bias. Recognize the potential for reversal and not just keep selling Aussie yen because that worked 2 weeks ago. Yeah, well, 2 weeks ago ain't the next 2 weeks. Not necessarily. Maybe it is, maybe it isn't. We have the data. So you can trade blind if you want, but why would you do that? So when we look at the S&P 500, okay, between April and May is quite nice. Isn't that neat? April to May. Okay. You see, April May. Now, we have 20-year average. We have the 5-year average because they're not always the same. Often they are. This month is not. You can see in the last 20 years, April's bullish. How do you, whoa. See? Over 20 years, okay? Over 20 years, April is up. Over the last 5 years, it hasn't been. Okay, fine. So let's back up. Over 20 years of data, S&P 500 tops out somewhere in January, falls February and March. Somewhere in the bottom of March, it bottoms out. Quite literally, this year was the last day of March. And then April, May, June, July, and August. So imagine that same trade that you usually take 25 pips out of, and you're in it for 3 hours, and you're like, oh my God, I made 25 pips. What if that same trade you could be in for the entire month of April, May, June, and July? So you're in it not for 12 minutes, you're in it for 12 weeks. The entry's the same. Your expectations are different. You can't predict the future, but you can see what is normal. When should you plant the crop? Okay? What I teach is, I say, well, March is a down month. We know that. April is an up month. We know that. So what I teach is somewhere around the third week of March. Does anyone here remember me talking about the third week of March as the beginning of the window? And no later than the third week of April, really the second week of April, you want to go from bearish to bullish. Samuel's like, hey, welcome back, Sammy. Best thing is join and attend the webinars. So I'm meeting with the group today at 4 p.m. Be there or be square, huh? Cool, right? So, what is this over here? That's my prediction for the S&P 500 by the end of the year. I have a worst case, base case, and best case, and it's using a neural network that I built. So notice it's not a linear projection. It's a non-linear projection based on, I don't know, thousands, tens of thousands, a million calculations. But I have this for everything. So my whole year is planned out in advance. Now, I used to do it manually, of course. Now, Aiden just does it for me, and I look at that, and that is what I think. This is what blows me away personally. This is what I think. That is my thought. That's what I think. Dude, it's insane. But of course, I taught Aiden to do it, so I guess it makes sense. But when I log in and I have this massive database of millions of data points, I mean, many millions of data points, and I look at it, I'm like, that is what I think. And then TRADARS talks to me in my own voice. And this is what I think. Dude, it's pretty extraordinary. It's weird. Weird in such an amazing way. Yeah. It's cool, man. So another way that you can use what we're doing here is Okay, VIX is down to 18, right? See, VIX is down 0.05 or up 0.05. Is that right? Or did it just bounce up? Yeah, okay, it's up, but it's funny. I see red is down, but of course, red is bad. Sorry. So yeah, we're up 0.5. Okay, 5 basis points. So we go over here, fundamentals correlation, and there it is there. Isn't that nice? And this says dollar's going to be flat today. Pound dollar's going to be flat, 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 flat. Everything is flat, but down, 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 down. 86% if you want to think about it that way. It's not quite what it is, but if you thought about that way, it's not. It's mathematically wrong, but not logically incorrect. 86% chance the S&P 500 will fall. But since VIX isn't up by much, it wouldn't be expected to fall by much. So right now, because of VIX, one thing, we can get a sense of not just the direction, which is the correlation, but the magnitude, which is our likely outcome. And this changes in real time. Dude, it's impressive, right? So if VIX is up today, very 80% chance junk bonds will be down if VIX is up. But again, VIX isn't up by much. It's basically flat. So yeah, 80% chance it'll drop 4 basis points, which is basically zero, right? So that's because this is actually what's happening right now. So you could, in theory, I haven't tested this if I've made this real time. It's nearly real time because it's correct. It's what's on the sentiment radar. But will these update? I don't know if I've done that because I think if I did, since they're all flat, this would just be moving up and down like cray-cray. Meanwhile, they're all about the same. Nothing is likely to happen. But maybe I can create some rules, right? But it'd be interesting if you could just sit here and it tells you what to buy and sell in real time based on direction of VIX. Now, in our risk radar, we look at VIX on 3 time frames and with a different weighting of each. And we look at all the other assets. So, like, this isn't enough, but you could do it. Or you're like, Aussie dollar is up today, right? Or Aussie yen. Oh, man, I got to clean this up. Okay, Aussie yen is up 33.33%, right? 33 basis points. Okay, USD yen is probably going to be up. And most things are kind of flat. So it's just confirming here, even though Aussie yen is up a little bit, based on what Aussie yen and everything else has been doing over 90 days, nothing's likely to happen. So what we ended up doing last night, based on our index radar, is we picked Aussie yen and Aussie dollar to be best performers, and right now they're the only thing moving. Oh, right on, Davey. Yeah. Wayne, is it different from the TRADARS group? This is TRADARS. Yeah. So you go to training, go to live webinars. So this is the one going on now. David Pegler taking over at 9:30. And then I'm coming on board at 4 p.m. And then Ada takes over for the Asian Fade session. So today there's 1, 2, 3, 4 hours of live coaching, which ain't bad for one day. Yeah, okay, and then I need to go, so I'll take this last question. Hi, Wayne. Inflation might go higher due to oil prices, resulting into higher interest rates for a longer period, causing dollar strength. But printing dollars causes dollars to weaken. Isn't it a catch-22? Okay, let's answer this. In the media, that is a common opinion, okay, that high energy prices will force the Fed to raise. Is that true? Well, I have a prediction market here where I can go to commodities. No, we'll go to interest rates. And, okay. Pause. Okay. And what else? If there's going to be a cut, it'll be by December. And will the Fed raise interest rates? How many Fed cuts in 2026? 60% say none. Again, Fed, no cut, no raise. Will the Fed rate hike in 2026? 86% of the market says no. All right, so let's go back. Inflation might go higher. Yes, I agree with that. Because of high oil prices. Definitely. Resulting in higher interest rates. No. That's not what the market is saying. This is what you hear on TV and in podcasts and YouTube gurus, and all of that adds up to Cambridge Community College, but not Harvard. It's not correct. It's not a correct logic. And you can see professional investors are actually agreeing with me. There's not going to be a hike. The reason for it is if you raised interest rates, it wouldn't solve the inflation problem. There's a dual mandate. The Fed uses monetary policy to influence inflation and GDP. CPI, GDP. Great. So inflation is high, CPI is high. And I say CPI. I know the Fed uses PCE, but when it comes to TRADARS, other countries don't have a PCE, so they all have CPI. So I analyze CPI versus CPI. So we'll just go with that. All right, CPI is inflation. Inflation will be high because of high oil prices. Yes, absolutely. Okay, so the Fed raises interest rates. Does it solve the problem with high oil prices? No. So what is the outcome? High interest rates slows GDP. So not only would the Fed not solve high inflation problems, they would actually lower GDP, and that goes against both are against their dual mandates. So the solution to high gasoline prices is that you change your behavior and you buy a Nissan Leaf. Sorry. Right? And you buy, or dude, like my wife's BMW gets like 40 miles to the gallon, and it's just a regular old gasoline engine, right? Twin turbo. Yeah. So like either drive less or you buy a car that gets 40 miles to the gallon. But you change your behavior. And so the solution to fire is fire. The solution to high prices are high prices, not high interest rates. Now, if the economy was booming out of control and inflation was high because everyone was rich and were competing to buy houses, competing to buy cars, competing to buy anything, then there's too much demand driving up prices. It's a demand part of the equation. And that's the Fed can only impact demand. The Fed cannot change the supply of oil and gasoline. So, for example, let's use a different situation. The government comes in and says the oil industry is bad and evil, and they're going to destroy our planet. Okay? I'm not saying I agree with that or not agree with it, but let's just say it happens. Like California. California's done it. So if you look at gasoline prices in California versus everywhere else, including New York City, big metropolitan areas, gasoline prices are way higher. California is in an energy crisis because they shut down all their oil refineries. So they can't turn their oil into gasoline. So they have to have someone else do it farther away, and then you got to get it to California. Well, there's mountains in the way, don't you? So it just isn't that easy. And so the state of California decided, and again, I'm not saying this is right or wrong, they decided as a society, and that's the beauty of the United States, is they have the ability to do this. California said they're going to prioritize the environment over energy. Cool. Now, the negative consequence to that is scarcity. Scarcity raises prices. And the Fed can't do anything about that. The Fed can raise or lower interest rates. They can buy bonds. They can sell bonds. They can raise or lower interest on deposits. It's not going to impact California's ability to get gasoline. Okay? So this is the fallacy. The Cambridge Community College people, which seems to be everybody on TV and YouTube, they're like, high CPI, Fed has to raise, because they know a very, 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 very basic kindergarten level of monetary policy of high inflation, the Fed raises. But they don't actually understand how a central bank works. And they don't actually understand economics. And so it's just wrong. It might get you a decent grade in high school, but it's not going to get you through grad school economics with that type of analysis. Okay. But see, that's the thing. So TRADARS is free, but if you go for the highest, most premium service, it's $200 a month, and you get a team of analysts to spend time. Right? You can hire me and a bunch of others for $200 a month. Like, dude, what? Shut the back door. So, anyways, I hope you like the prediction markets. I hope you like the indices, so you know what you should be trading. Oh, look, it just all updated. Whoa, 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 whoa. You see that? Oh my God. Cool. So now you know why you should be trading. You should know what to be trading. And then so you want to buy dips on, Aussie yen, for example. Right? And so, right, you know that you're buying dips on Bitcoin, which I'm doing. But like when we go out here, you believe, okay, you believe, that's CAD. I want Aussie, sorry. Oops. Aussie. Okay. So we did this last night at 4 p.m. last night. Okay. That we were looking for buying somewhere in this purple zone and taking it north, which we did a week ago, up to 114 and a quarter, 114 and a third. And that was at, so you're in at 113, going for 114, and we're halfway there already. Yeah. Where did we get that information? Right here. Boop. Okay. Buy Kiwi dollar, buy Aussie dollar. Buy Kiwi yen, buy Aussie yen. Everything else sucks in comparison. Maybe a little bit of pound. But if you don't know how to, if you have to look through all your charts to figure out what to do, you're already too slow. Do you personally use 3 time frame approach on your technical? I don't know about 3. Maybe. Look. Here's what I did a week ago, right? Let's go in here. Okay, so a week ago, well, let's say at the beginning of April. Okay? Beginning of April, there was 2 assumed bullish trade plans here. This and this. Now remember, actually, this one goes higher. Okay, this is what I think. Now remember, I have 20 years of data saying Aussie yen is going to go up 3.5% this month. I knew that before, and we know March tops out. March ends low. We want to buy it somewhere around the end of March, and we want to ride it up on average over 20 years, 3.5%. We know all of this before any of this happened. So we get our little green zone out, and if it bounces here, it's going to go there. Well, it didn't. If it bounces here, it's going to go there. We did. Okay, cool. So 3 time frames, I'm already done that. At that point, you're just done. Do I have to look at the daily chart again? No. But if you've never done that type of analysis, okay, remember confirmation bias. I thought up before it even happened. Even while it was falling, I thought up. I had the data. And so then once it reverses, you're like, aha, confirmation bias. That 5A cross with a 21 above a 55, dude, all day long. That's a buy at 109 on our way to 114 to 115. Done. Do I have to look at that again? No. That's the strategy. I don't know if it's going to work. If it kept falling, you just don't buy. Okay. Now what? Hourly? Yeah, I like hourly because I like to day trade into my swing trades. Can I scalp into it too? For sure. Okay. So like one of the things I would do now, if I were me, I would do stuff like this. But that just mimics the 21. Fine. Right? This is a buy. This is a buy. What's the next one? Okay. You could use daily pivot points. Whatever. You could use Fibonacci. Whatever. They're all the same. It's all based on implied volatility. It's implied that this is going to go up, and it's implied I'm going to buy dips. Okay? And I'm watching not just this chart, I'm watching all Aussie pairs, all Kiwi pairs, all yen pairs, right? See, I'm watching them all. Okay. Yen against Aussie is down 3.11, 3.12. Kiwi is down 3.22. So yen is weak. I'm looking at 7 pairs to do that calculation. Yen is weak. It is. It's a fact. And that's how we picked the 4 best movers today, but we did it yesterday. So I invite you to swing by traders.com. And you'll be shocked what you get for free. You can sign up for free. You don't even need a credit card. And then maybe over time, you're like, dude, I need some of this premium stuff. Then you can take care of that then. It's not a big deal. But you will be shocked what you get for free. Almost everything you saw today. Yeah. And then, like I said, I'm going to re-release the program where if you decide you want to trade with my charts, for example, let's just do a clean version of this. Okay. Let's say you want this chart and you want to trade through Trader's Way. I'll give you the chart if you sign up to do your execution through Trader's Way through, right, TRADARS. You get the charts, which are a benefit. So I'm going to put that up so you can download them. But the second benefit is Trader's Way puts a little bit of your spread back into your account as cash, not equity, not quote unquote, I don't know how you want to think of equity, sort of like fake cash. No, actual cash you can withdraw. They'll put cash back into your account. You can trade it, you can withdraw it, whatever. And so you get a spread rebate automatically. Well, that's pretty cool, right? Oh, and that's interesting that you bring up Harvard. So apparently, I've been nominated to sit on one of the Harvard boards, and there's going to be voting, I think, over the next 3 weeks. So if you happen to be at Harvard, please vote for me. Isn't that wild? I got an email. They're like, you've been nominated. And the nomination committee went through all these nominations, and they're like, dude, we want you to be a director on the board, but it has to be voted on. So I made it through the internal review. So it was nominated. Then the internal review went through all the nominations, and I'm one of, I don't even know, 5 people. I think there's 3 positions open. So how many did they pick? 5, 10? Not 10. 5 for 3, 6 for 3? I don't know, but so I might be a director soon on one of the Harvard boards. Isn't that neat? Yeah. And one of the things I want to do if I get selected, I want to work on the Harvard endowment. I want a piece of that $40 billion. Hey, a boo boo. Yeah, 40 billion. Of course that's where I'm going to go. Like, you guys can go be radical liberal lunatics over there. I'm going to be hanging out with the 40 billion. Me and the 40 billion are going to be best friends. So that's cool. So the new things in my life, I'm working with the government now on entrepreneurialism, which is really interesting on a county and state level. So I'm going to learn a lot about that. And now if I work in academia and play around, quote unquote, with their money, or at least see how it all works, to see make some sausage at Harvard, boy, wouldn't just like amazing personal learning experiences to see how academia handles billions, to see how state and local governments are handling their money and stuff. I mean, fascinating opportunity to grow. So, anyways, I gotta go. Thank you for being part of the TRADARS community. I hope you're excited about it, and I hope you sign up. I hope you link up with Traders Way, and it's a match made in heaven, I'm telling you. Yeah. I mean, I think you like the spread rebate, right? Isn't that nice? Yeah. I will see you soon. And if you're, and don't forget, David Pigler's up at 9:30, and then I'm up at 4. So you still got 2 more hours of personal coaching. Oh, Jim. No, that would be, no. It would definitely not. Yeah, I do my board work and my charitable work just because I don't, I want to give back to my community. And I am a workaholic. So the best way to give back to community is just more work. But I don't watch a lot of TV. I don't watch a lot of sports. I don't have any hobbies. I don't golf. So what do I do with my free time? I do charitable work. So I sit on 5 boards. Okay. But I don't watch any TV or golf. Oh, okay. So anyways, peace on earth. May the pips be with you. May your profits be above average.